Question number 1. Under government auditing standards, when would an auditor most likely be required to communicate management's misappropriation of assets directly to a federal inspector general? Letter A. When the governing body fails to make a required report on such acts. Letter B. Whenever any misappropriation of assets is discovered, regardless of materiality. Letter C. Only when the amount misappropriated exceeds a specified dollar threshold. Letter D. Never. Such communication is always the governing body's sole responsibility. Correct answer is letter A. Explanation. Letter A is correct because the auditor's direct communication to a federal inspector general is triggered specifically when the governing body itself fails to make a report it was required to make. The obligation isn't automatic for every misappropriation discovered, and it isn't tied to a fixed dollar threshold. It's about the governing body's own failure to act first. Question number 2. To whom would an auditor most likely be responsible for communicating significant deficiencies in the design of internal control when auditing under government auditing standards? Letter A. The Securities and Exchange Commission. Letter B. A court-appointed creditors committee. Letter C. The entity's shareholders. Letter D. Legislative and regulatory bodies. Correct answer is letter D. Explanation. Letter D is correct because government auditing standards specifically direct significant deficiency communications to legislative and regulatory bodies, reflecting the public accountability built into government audits. The SEC, a creditors committee, and shareholders aren't the intended recipients in this governmental context. Question number 3. When performing an audit of a city that is subject to the requirements of the Uniform Single Audit Act of 1984, which standards should the auditor adhere to? Letter A. General Accounting Office Government Auditing Standards. Letter B. Governmental Accounting Standards Board General Standards. Letter C. Governmental Finance Officers Association Governmental Accounting, Auditing, and Financial Reporting Principles. Letter D. Securities and Exchange Commission Regulation SX. Correct answer is letter A. Explanation. Letter A is correct because a Single Audit Act engagement specifically calls for adherence to the government auditing standards issued by the General Accounting Office, commonly known as the Yellow Book. The other 3 options name real organizations or standards, but none of them is the governing framework for this kind of audit. Question number 4. Which of the following is a documentation requirement an auditor should follow when auditing in accordance with government auditing standards, the Yellow Book? Letter A. Documentation that all account balances were tested regardless of materiality. Letter B. Documentation of the entity's continued eligibility for financial assistance. Letter C. Documentation of supervisory review before the report is issued. Letter D. Documentation is not required beyond what a standard financial statement audit already requires. Correct answer is letter C. Explanation. Letter C is correct because the Yellow Book specifically calls for documenting that supervisory review took place before the report goes out, adding an extra layer of accountability beyond a typical financial statement audit. Testing every account balance regardless of materiality, or documenting program eligibility, aren't genuine Yellow Book documentation requirements. Question number 5. Under what circumstance is an auditor required to report a falsification of accounting records directly to a federal inspector general? Letter A. Whenever any falsification of accounting records is discovered, regardless of materiality. Letter B. When the auditee fails to properly disclose the falsification after being informed. Letter C. Only when the falsification results in a material misstatement of the financial statements. Letter D. Only when requested to do so by the entity's audit committee. Correct answer is letter B. Explanation. Letter B is correct because the process works in steps. The auditor first communicates the falsification to the auditee, and only escalates to a federal inspector general if the auditee then fails to make appropriate disclosure. It isn't an automatic report for every falsification found, and it isn't limited only to cases that create a material misstatement. Question number 6. How is materiality determined for purposes of a Single Audit Act compliance audit? Letter A, calculated in relation to the financial statements taken as a whole. Letter B, decided in conjunction with the auditor's risk assessment. Letter C, ignored, because all account balances, regardless of size, are fully tested. Letter D, determined separately for each major federal financial assistance program. Correct answer is letter D. Explanation. Letter D is correct because Single Audit Act materiality is assessed program by program, not at the level of the entity's financial statements as a whole, since each major federal program is essentially audited in its own right. Materiality still plays a central role here, so ignoring it or testing everything regardless of size isn't accurate either. Question number 7. An auditor detects material instances of non-compliance with program requirements while reporting on compliance under government auditing standards. What opinion should the auditor express? Letter A, a qualified opinion or an adverse opinion. Letter B, an unmodified opinion, since reasonable assurance on compliance has already been provided. Letter C, an opinion that need not disclose the specific instances of non-compliance. Letter D, a disclaimer of opinion. Correct answer is letter A. Explanation. Letter A is correct because material non-compliance is treated much like a material misstatement, driving the auditor toward a qualified or adverse opinion depending on how pervasive it is. An unmodified opinion clearly wouldn't reflect what was found, and the specific non-compliance can't simply be left undisclosed. Question number 8. A CPA performed an examination of big cities' general-purpose financial statements, with the examination scope including the additional requirements of the Single Audit Act. In reporting on big cities' internal accounting and administrative controls used to administer a federal financial assistance program, what should the CPA do? Letter A, communicate those weaknesses that are material in relation to the general-purpose financial statements. Letter B, express an opinion on the systems used to administer major federal financial assistance programs, and express negative assurance on the systems used for non-major programs. Letter C, express negative assurance on the systems used to administer major federal financial assistance programs, and express no opinion on non-major programs. Letter D, communicate those weaknesses that are material in relation to the federal financial assistance program. Correct answer is letter D. Explanation. Letter D is correct because when reporting specifically on controls over a federal financial assistance program, the materiality yardstick used is the federal program itself, not the general-purpose financial statements. Neither an opinion nor negative assurance is expressed on these internal control systems at all, so both of the other two options must state what kind of report is given. Question number 9. Which of the following is a common aspect of the various types of audits of recipients of federal financial assistance, as required by federal audit regulations? Letter A, materiality levels are always lower than in a typical financial statement audit. Letter B, the auditor must obtain written management representations specific to each federal program. Letter C, the audits include reports on the financial statements and on internal control and compliance. Letter D, requirements for reporting illegal acts are identical regardless of the type of audit being performed. Correct answer is letter C. Explanation. Letter C is correct because across the different types of audits of federal assistance recipients, the common thread is producing reports on the financial statements alongside a report, separate or combined, on internal control and compliance with laws and regulations. Materiality levels, program-specific representation letters, and the legal act reporting requirements all vary depending on the specific type of audit involved. Question number 10. Which statement should be included in an auditor's report on an entity's compliance with laws and regulations when performing an audit in accordance with government auditing standards? Letter A, a statement that the auditor assumes responsibility for the entity's compliance. Letter B, that management is responsible for compliance with laws and regulations. Letter C, a statement quantifying the total dollar amount of federal assistance received. Letter D, a statement that no instances of non-compliance were identified. Correct answer is letter B. Explanation. Letter B is correct because this kind of report needs to make clear that compliance with laws, regulations, contracts, and grants is management's responsibility, not the auditor's. The auditor never assumes responsibility for the entity's own compliance, and the report doesn't quantify total federal assistance received or claim, without basis, that no non-compliance exists.